Welcome to today's Explainer. Have you ever kind of felt like the global financial system is operating with two totally separate rulebooks? One for everyday folks and another for the ultra-wealthy? Well, today we're going to reverse engineer the hidden architecture of the global economy. We are pulling back the curtain on the actual mechanisms that drive wealth.
Okay, let's dive right into this blueprint. We'll be looking at how modern money is created, the architecture of taxation, strategies of generational wealth, the nexus of power, and finally governing the economic machine.
Section 1. How modern money is created, the foundation of the machine. We've got to start by dismantling a super common myth. Most of us picture money as physical cash, just printed by the government, right? But the reality is actually far more fascinating. Under fractional reserve banking, money is a dynamic product of credit creation. When a commercial bank approves you for a loan, they don't, go to a backroom vault and hand over existing cash. They literally just type digits into an account. They are creating new broad money right out of thin air, and it's backed by absolutely nothing but public trust.
Now, because banks only hold a tiny fraction of actual deposits, the whole system is inherently vulnerable to bank runs. So, to prevent your savings from just vanishing overnight, regulators enforce some really strict constraints. The liquidity coverage ratio, for instance, ensures a bank can survive a sudden 30-day panic. Meanwhile, capital adequacy rules are there to guarantee long-term solvency. So it's basically this constant, high-stakes tightrope walk between regulation and stability.
And right now, we are witnessing the next evolution of this whole system. It's a massive global race. On one side, you have public, state-backed, central bank digital currencies going head-to-head against private sector stablecoins on the other. Central banks obviously want to maintain ultimate control of the money supply, while private markets are leveraging blockchain tech to innovate outside those traditional safety nets we just talked about. It's a huge clash between public regulation and private innovation.
Section 2. The architecture of taxation, the government's revenue engine.
So, moving on, how exactly do governments extract the revenue they need to actually run the state? Well, primarily through direct taxation, like personal income tax, which operates on a progressive sliding scale. If we use South Africa as a prime example here, the rule is pretty straightforward. As your earnings step up into higher brackets, you're penalized more heavily on that last unit of income. It peaks at a massive 45% marginal rate. Simply put, the more you make, the harder you're taxed.
But wait, governments don't just tax what you earn, they tax what you spend, too. Indirect consumption taxes, like VAT, are basically the ultimate stealth engine for state revenue. Because VAT is collected right at the point of sale, governments can systematically bump these rates up over time to manage their debts. It's highly efficient for the state, for sure, but the ultimate economic burden falls squarely on the final consumer. That means everyday citizens are the ones who really feel the squeeze at the grocery store.
Section 3. Strategies of generational wealth, navigating the rules of the game.
So, if that tax net is so inescapable for the vast majority of us, how exactly do the ultra-wealthy manage to preserve their capital? Well, building wealth usually starts with business, but entrepreneurship is absolutely brutal. Roughly 65% of businesses fail within their first decade. It's incredibly risky. But once you beat those staggering odds and actually accumulate real capital, the whole game changes. It completely shifts from taking massive risks to actively shielding your assets from the state.
And they don't do this by just hiding money under a mattress. The wealthy utilize highly specialized policy incentives. Take South Africa's Section 12B solar incentive, for example. It's an absolute masterclass in leveraging government policy. By investing capital into renewable energy, which is something the state desperately needs, by the way, investors can claim accelerated depreciation. What does that mean in plain English? It means they legally and dramatically wipe out their corporate tax bills, all while helping stabilize the national grid.
Okay, but what happens when it's time to pass that empire down to your kids? To avoid massive estate taxes, the ultra-wealthy deploy these incredibly ingenious legal structures, like the Grantor Retained Annuity Trust, or GRAT. By exploiting the complex mathematical gaps between income tax rules and gift tax rules, they can essentially zero out the initial value of a gift. Then, if the asset explodes in value, all that excess growth passes to the next generation completely, 100% legally, tax-free.
Now add offshore secrecy jurisdictions into the mix, and domestic wealth taxes become, well, almost entirely optional. Through very specific corporate structures in places like Mauritius, massive capital flows can be legally routed to achieve withholding tax rates as shockingly low as 3%. Remember that 45% income tax rate for everyday earners we talked about earlier? Yeah, this 3% rate is exactly what we mean when we say there is a second rulebook in action.
Section 4. The Nexus of Power, Shaping the Architecture.
All of this brings us to a really fascinating question. How does financial power actually translate into the ability to write those very tax loopholes we just discussed? It goes way beyond something as crude as just buying votes. Financial elites use 4 highly clinical mechanisms. They fund political campaigns, deploy trade groups to lobby lawmakers, pay think tanks to shape the public narrative, and ultimately co-opt regulatory agencies. By doing this, they can literally dictate which laws even make it to the floor for a vote.
And listen, this isn't just some abstract theory. As the Zondo Commission thoroughly documented in South Africa, this kind of institutional capture can directly hijack a state's very capacity to function. When the regulators themselves get co-opted by private wealth, the public interest doesn't just take a back seat, it gets completely sidelined for commercial gain. It's this stark, frankly terrifying feedback loop between money and political power.
Section 5. Governing the Economic Machine, the Macro Managers.
Finally, let's take a look at the macro managers sitting at the control board, desperately trying to keep this entire machine from exploding. I'm talking about the National Treasury and the Central Bank. The tricky part is, they often have completely diverging mandates. The central bank wants to control inflation by raising rates, but the Treasury has to pay the interest on the national debt. If public debt spirals out of control, we enter a state of fiscal dominance. The central bank gets trapped. They're forced to keep rates low so the government doesn't default, which inevitably fuels massive inflation and just quietly devalues the money in your pocket.
Exactly how these macro managers should operate is basically the defining ideological clash of our era. On one side, you have orthodox economists warning that government deficits are incredibly irresponsible and will trigger hyperinflation. But on the other side, modern monetary theory, or MMT, offers a radically different rulebook. MMT argues that a government that prints its own money can never technically go broke. They suggest that taxes don't actually fund the state at all, but just exist to drain excess cash and cool down inflation.
Understanding these dual realities is really the very first step to seeing how the global economy actually operates. But it does leave us with one urgent, lingering question. How does a society maintain a fair social contract when the rules of the economic game operate with 2 entirely different manuals? When the foundation of our system relies on public trust but is ultimately navigated using private rulebooks, what is our actual path forward? Thanks so much for exploring the economic machine with me in today's explainer. Keep questioning the architecture around you.